G'day, Pat Cranchell here from North Brisbane Home Loans, and today we're talking about why you should look at refinancing and touching on the costs involved. So for many people, they have a home loan that's been with their existing bank for a little while potentially, may have come off fixed rate recently through that pandemic when the rates were 2 or 3%, but regardless of that, everybody should be reviewing their home loan at least 12 monthly, basically. Annually is when you should be sort of reviewing it, making sure that your lender is giving you the best rate that they possibly can. At North Brisbane Home Loans, we've got a team behind us that actually reviews those loans that we've written on behalf of our clients annually, or as and when a client wants us to make sure that the rate that you're paying is the most attractive in the marketplace. Now, if your current lender's not meeting that, then you need to be looking around. It surprises me how many people park up at a service station to save themselves 4 or 5 cents a litre, but they don't actually review their home loan. Now, I know that some people don't want to do it because of the paperwork involved, etc., but it is a lot simpler these days, and we can certainly assist with making it a little less stressful through that process. So the first thing would be to make sure that your rate that you're currently on is around the market. So contact your bank, have a look, see what that looks like, and then if you want to, you can contact us and we can let you know what the current rates in the marketplace are around, and then we can go from there. Other people want to refinance because they want to get access to some money, maybe to do some renovations around the house, buy a new car, refinance or consolidate some other debts that they potentially might have, to put it into one loan to reduce the payments, to free up some cash flow. There's many reasons why people would like to refinance. Now, in order to improve cash flow, there's 2 things that can happen. You can either reduce the interest rate, which would reduce the actual loan payment per month, or potentially you could look at extending the loan term a little bit to give yourself some relief if that's what you're chasing. Now, we're not recommending that people extend their loan terms out, but sometimes that's what has to happen, and because the rates have increased potentially from where the clients were comfortable. Maybe the client has changed his circumstances. They've now got a child or 2 based on what the previous application was on 2 incomes. One of them's not working. So there's a number of different reasons. The cost to move from one bank to another varies, but it's roughly $1,200 to $1,400 by the time you pay the exit fee to get out of your existing bank, and the setup costs, and the state government's got their hand out for a couple of $100 as well. So it's around about that figure. So we need to make sure that it's going to be financially advantageous for you to do what you need to do, taking into account that. And also maybe the structure of the loan. Maybe you're on an offset account scenario, you're paying an annual fee, you don't really need that anymore, you're just happy to have a redraw, no ongoing fees and a low rate, etc., etc. So these are the sort of conversations that we have with our clients to make sure that you're getting looked after and you're getting the most appropriate loan and setup that suits your situation. So hopefully that's given you a little bit of information. All the brokers here have been trained personally by myself, so they too have your best interests at heart, and we look forward to having a chat with you shortly and seeing how we can assist. Take care, and we'll talk to you soon.